We are days away from chaos. Hey, everybody, you're watching Bull, Boom, Bear, Bust. And this could be, in my opinion, market shattering chaos or market panics could come out of this here. So, we're going to talk about that here in a little bit. We're talking about, yes, early November, what many of you think I'm talking about. I think we're going to see a lot of things happen, a lot of stuff go down, so to speak, in early November. Will it rattle the markets? And if so, will the markets just be pumped back up like a 2020 type of situation where the health crisis came in, stock market got knocked down pretty significantly? We're going to look at some charts on that, but it got pumped right back up with massive money creation, massive money output into the economy, to the people, to the banks, etc., allowing banks to loan out infinite amounts of money, literally with zero reserves required out of the banks. We're also going to talk about some banks closing more branches and a lot of white collar jobs. Wells Fargo pulling a lot of their corporate workers out of Portland and other cities. In Oregon, we're going to get into finance news, of course, investing, the markets, the stock market, oil prices, cost of living, inflation, you name it. We're going to get into it. Please make sure you're subscribed. Let's go ahead and jump right into it right now. Starting right here, Wells Fargo will make sweeping cuts in Oregon next year, moving jobs to other cities. That's what they say. Look at what the companies did that had people working remotely. A lot of them are calling people back. And in many cases, if you don't go back, you're out of a job. You're gone. Recent article here. Several reports coming out just in the last few weeks. Business Insider, list of major companies requiring employees to return back to the office. Amazon is in there. Amazon orders workers to return to office 5 days a week. 3M dials back remote work policy, requiring workers to come back to the office adhering to a fully remote friendly policy far longer than many of the companies. Well, they did, but now they're dialing it back. A majority of remote workers would quit if forced to return to the office. Citigroup asks 600 staffers to return to office full-time. It's kind of an older article back in May. Let's see here. Amazon. So Amazon's the big one that recently is telling people to come back to the office here. So, yeah, will Wells Fargo actually open up these offices in other states like they're saying, or is that just a way to make people not panic so much? Remember, just recently here, just came out last month that Wells Fargo closed 62 branches. So it looks like more branches closing than opening. Wells Fargo makes sweeping cuts in Oregon next year, saying it will be moving jobs to other cities. I don't see it, folks. I don't see Wells Fargo opening up these jobs here, like this article says out of OregonLive.com. Wells Fargo pulling out of Portland, Hillsborough, and Salem as early as beginning of 2025 as they consolidate operations elsewhere, pending cuts. You can kind of see them pulling out of Portland. Portland's become a disaster. The company has more than 1,000 workers at these sites. Folks, that's why I always tell people the lending and banks loaning out money the way they do, they're looking at your job today. You're not even guaranteed to have a job next month, let alone the next 30 years. A lot can change in 30 years. And we're in such a huge economic bubble right now. I'm afraid to see people taking out so much debt, thinking that their jobs are always going to be there or stable. Again, a lot could change in 30 years. Imagine what home prices would be if there was not a 30-year mortgage. Imagine what home prices would be if banks couldn't just loan out money that they don't have. Still on the topic of banks, JP Morgan, look what they're doing, folks. They are suing customers who they're saying stole thousands of dollars in an infinite money glitch. I think we reported on this. People were able to get money out of the ATM after depositing a check. Normally, when you deposit a check, the bank will hold it to make sure it clears, to make sure the funds are available. In this case, there was a glitch. People could deposit a check for $1 million and there was no hold on it. They could actually immediately withdraw the money. So now they're suing customers who allegedly stole thousands of dollars from ATMs by taking advantage of a technical glitch that allowed them to withdraw funds. And this is out of CNBC here. It became huge on social media. A man who owes JP Morgan Chase $290,000 after an unidentified accomplice deposited a counterfeit $335,000 check at an ATM. How do you get $290,000 out of an ATM? Or maybe he took out like 10,000 in a bunch of different ATMs. Who knows? But it was a masked accomplice. So he's saying it wasn't him, but the person taking out the funds caught on camera had his information and was wearing a mask. But he's saying it wasn't him. So very interesting. JP Morgan suing customers who allegedly stole thousands out of ATMs. They filed lawsuits in at least 3 federal courts, taking aim at some of the people that withdraw the highest amounts. People are actually going on social media bragging about it. Have you seen these videos where people actually commit crimes and they film it and they post it on social media? Just brainless people here, folks. And to think that you're going to get away with this when you're on film at these ATMs, they're filming you, folks. On August 29th, a masked man deposited a check in a defendant's Chase bank account in the amount of $335,000. The bank said, after the check was deposited, the defendants began withdrawing vast majority of the ill-gotten funds. So, folks, when there's a glitch and your money's gone, is the bank going to go after the person who stole it? And will you get your money back? I've been talking to people that had to prove that it wasn't them that took the money out when they alleged fraud. So one person had a transaction that was like thousands of miles away from where he was. The bank wanted him to submit proof that he was not in that state. In other words, submit proof that he was in his local facility or local city, local area. And I believe he had to use cell phone records or something like that. But imagine if he didn't have the cell phone records to prove that. Would the bank have said, sorry, even though you're saying it was fraud, we're not going to give you the money back because you didn't prove that you were not in the city spending this money, right? Pretty interesting the way banks actually operate here. But looks like these people are going to get sued. But I think deservingly so, even though the banks really, it's not their money. They loan out money they don't have with the fractional system. So even though they've gotten the money, what I think should be considered illegally, they're going to sue these people for taking the money, basically suing the people for doing the same thing they do, getting money for nothing. If you look at the banking system, that's what the banks do. And most of you know we came off the gold standard in the early 70s. Ever since then, it's been what's called a fiat currency, and therefore it's not real. It's just created on a digital screen. More proof in the pudding, folks. We've said things would get worse here continually over the past few years. Here's another study that backs it up. More Americans living paycheck to paycheck compared to 5 years ago. That's a Bank of America data. Share of U.S. households living paycheck to paycheck up across all income brackets since 2019. But yet, if you see the Bank of America interview with Brian Moynihan, the CEO, consumers are strong. They're racking up credit card debt like never before. That means they're strong. So they look at spending as a sign that they're strong. Remember, consumers are strong. The government goes out and buys weapons and funds wars, and that's chalked up as economic growth because government spending is counted in the gross domestic product numbers. Folks, you can't make this up, folks. Debt accumulation by federally and also locally and individually, people running up debt, entities running up debt is considered economic growth. And then you wonder why we end up in these bubbles with the cost of living so high, home prices are outrageous, everything costs so much because spending is the key to what they call economic growth. Folks, let's move on here. Oil prices fell somewhat as reality of weak global demand overtakes the risk of a wider war in the Middle East. I wouldn't count out a wider war yet, but oil prices fell because of the lowered, what they're saying is a lower risk for a wider war in the Middle East. I'm worried about war right here in the U.S., and it's going to be, I think, chaos coming up here within the next couple weeks here. We're going to talk about that here in just a little bit. But before that, a couple other things I wanted to get into today. Look at this out of Housing Wire, folks. How crazy is this? The unexpected strength of home prices this year. If you've been on this channel Folks, it's not unexpected, right? Nobody that watches this channel expected the housing bubble to bust and home prices to come crashing down, because they're not changing anything that made home prices inflated in the first place. We still have billionaires coming in, Wall Street buying up a lot of homes, 1 and 2 homes here in California owned by investors. But remember, folks, still on the topic of housing here for a few minutes, home prices aren't as strong as we're being led to believe. If you look at these outlets like Realtor and Zillow and these mortgage companies that put out these surveys for median home prices, even the Case-Shiller Home Price Index, which just looks at 20 cities, doesn't really give you the picture. If you look at the Fed data here, we're down pretty significantly here. The peak, according to the Fed, fourth quarter 2022, 442,000. Most recent data here, 420,000. Sorry, I got some noise coming in here.
I loved their depth of the.
Anyways, you get my point here. Depends on who you believe when it comes to the housing data. Do you believe Zillow? Do you believe Redfin and these other real estate companies that rely on high home prices to stay viable, right? So I would look at actually the Fed in this case more than I would these other outlets that say home prices are making new highs. Sure, in some cities, but overall, we're down from the peak. Oh, and I need to apologize here. I found an article that I meant to talk about earlier with going back to the office. Starbucks is another one, threatens to fire staff who don't come back to the office. Starbucks Corp telling its corporate staff they could be fired if they don't come back to work at the office 3 days a week starting in January. So imagine these people that went to different states, lower price states, especially during the pandemic. Imagine these people, went out and bought a home and relocated hundreds, sometimes thousands of miles because they thought that their remote work job was going to be permanent, and they're in for a rude awakening. Starbucks will implement a standardized process to hold workers accountable if they don't abide by the coffee chain's return to office policy, according to a memo sent to one of the company's divisions that was seen by Bloomberg News. Consequences are up to and including separation. They use the word separation instead of fired. That's nice. CEO Brian Nicole's own work arrangement allows him to live in California and travel 1,000 miles to Seattle on the company's corporate jet. I wonder if he's going to be required to go back to the office or he'll get fired. I doubt it. And thousands of miles on a corporate jet. I thought he was for being green and clean and all that good stuff, right? With the environment. What's going on with that? Now, when it comes to borrowing money and loading up on debt, most people are in some sort of debt, right? Some people say that's the only way to even survive nowadays. But here's something that kind of made me think a little bit, and it's actually pretty true. Let me just bring this up here, and let me make myself a little bit smaller, make this a little bit bigger here so you can read it, but I'll read it to you here. When you have $100,000 in the bank and drive off in a paid-off $5,000 vehicle, people assume you're broke. $100K in the bank, driving a $5,000 vehicle that's paid off. But if you have $5,000 in the bank and drive off a $100,000 financed vehicle, people assume you're doing great. Right? Isn't that the truth? Isn't that the truth? When you see somebody in a nice vehicle, you just assume, wow, they're balling, they're doing good, they're very successful. But folks, so much of this is debt-based imagery that I think a lot of people kind of fall into the trap of wanting to look more successful than they really are. When I worked at Geico Insurance Company here in San Diego, and Warren Buffett came to the location in Poway here, North County, San Diego. And this was like the early 2000s. And I didn't see this, but rumor has it that he pulled into the parking lot in like an older, I believe it was a Ford Taurus. I don't remember exactly, but it was like a early to mid 90s Ford Taurus. So maybe he just does that to prove a point, or maybe he is like many people, he doesn't want to look wealthy when he really is. All right, let's talk about what I mentioned here at the beginning, folks. Chaos is coming, I think, within just a few weeks. I think we're going to see a lot of upheaval that's going to be flowing out of the political side of things here. And with what we have coming up in early November, I think they could possibly use this as a way to pull the rug out from the markets. Will it be contrived, or will it be a purposeful rug pulling or plug pulling as an excuse basically to bring the markets down? And will we see contagion into the banks? And will we see global panic come out of this here? I mean, please let me know what you think about this down in comments, but I would highly recommend having some cash out of the system, out of the banks, having some canned goods, survival essentials, if you will, ready, right? And I said this 4 years ago, but I think it's much, much worse now than what it was back then. I think we're going to see chaos, folks. Could I be wrong? I hope so. My fear is, though, that if the chaos does happen and we do see some sort of sell-off or panic, I think we're just going to have so much money thrown at the problem that inflation is going to get even worse. But then they'll say, nobody saw this coming. Nobody expected this. We had to respond to the crisis. Sound familiar? We had to respond to the crisis. We had to step up and make sure the banks were still able to loan out money, still have liquidity, so people could still get loans, because if people can't get loans, they can't survive, they can't buy anything. But yet that makes the problems worse, folks. The cure is less money being loaned out, less debt. The cost of living comes down. It fixes itself. Yes, you have a lot of jobs that get lost, especially jobs that rely on people borrowing money, like the banker jobs, the loan officers, the appraisers, the real estate agents, all the people that survive based on money being loaned out. You know what I mean? The whole financial world, basically. Their jobs are dependent on ever increasing amounts of debt. So their jobs are at risk when the money flow slows down or stops. God forbid it stops. Then you see a massive collapse, folks. So buckle up, folks. I mean, let me know what you think about this. I see some pretty big risks, not just me. A lot of big investors out there we've talked about here many times. A lot of big investors right now in cash positions at all-time highs for their own personal or company portfolios, right? I'm sure many of you know a few people that I've talked about here and spoken about. So anyways, buckle up, folks. Get ready. Strap in, whatever you want to call it, because I think we're going to see some big volatility closing out October and going into early November. We'll see what happens on the 5th. And even after that, could this carry on for weeks? Right? What will we see? Also, people are out there predicting some sort of outage. And I'll let you determine what you think that means. What kind of outage, right? Would it be something that affects you, that affects me, that affects all of us, or just localized, right? Either way, be ready, folks. As always, keep stacking. Make sure you are subscribed. What do you think about the news today? We talked about the more jobs being lost, more people being called back to the office, banks closing down, a lot of corporate offices saying they're relocating. I don't see it, folks. With all the branches that are closing, I see many more layoffs, and I see it accelerating. And look at this year. We're on pace for the worst layoffs in a very long time. I'll have to get the charts on that here. But we're on pace for more business closings, even worse than 2020. And I think when we close out the last couple months here of the year, we're going to be largely above where we were in 2020. So think about that, right? The store closures, worse now than a shutdown year where the economy basically shut down and we had to send out stimulus checks to people and cancel rents, cancel foreclosures. But this year, even worse than that year of the shutdown. So something to think about, folks. What do you think about the preparation recommendations? Do you see what I see? Do you see what I see? All right, folks, keep stacking. I promise I won't sing next report. Show up here. Show up here. We'll be on top of it for you. Bye for now. Peace.